I'm just going to speak about this morning is the whole issue of funding. Funding in the widest sense, but in particular because today is manufacturing type of event, some special focus on the manufacturing side. You're probably aware that Enterprise Ireland, the year-end statement there early January, announced 2015 at 18.6 billion in exports. Now that's the indigenous side, not for the rest of the multinationals. So we're specifically looking at how SMEs from indigenous Irish companies that are not the wider multinational scene. But for 2016, yes, I know it's an election year, but they have pushed the boat out. They maintained they expect to get 22 billion in exports in 2016. They want to have 550 companies starting to export for the first time, and I'll speak about that as well. They will be nominating 300 HBSUs, and earlier in the week I was working with the New Frontiers program, and out of that New Frontiers program, after a 2-year, we've been selecting with Enterprise Ireland HBSUs, so we're working through that. But I don't think there'll be any difficulty in getting the 300 HBSUs. That's the high potential startups for those who are familiar with Enterprise Ireland's jargon. And they're expecting that they're looking for new growth in new markets, so 50% there. So one of the sectors to grow, well, you're probably aware that most of the investment money has been going into the technology side, but 90% of it. Now the technology, you're covering everything from financial systems, ICT systems, the social media, and of course the associated technology with life sciences. So there's a significant sectors of growth. We so happen to have our SMEs along in the right sectors. And in terms of how they're going to fund themselves, well, the difference between last year and this year, so in 18.6, an extra 3.4 billion of funding going to be required. So a 22 billion and 3.4 billion coming through. And literally, the scenario is not a shortage of money, which was a position some years back. There's an actual wall of money out there these days. There's an oversupply to a certain extent, chasing good projects. So there has been part of the reason I think why there's an oversupply is because there's a more diversified approach from very strongly by government in terms of how businesses get their funding. There's been more equity finance chasing startups as well, and again part of the government's plan is to bring in venture capital companies to locate their European offices here and pump money out, and that certainly helps. And of course the whole issue is scaling. Now not every company wants to scale up, so really the whole push is for, if you want to scale up your business fast, the government are pumping the funds behind you, and Enterprise Ireland are working very closely with you. If you decide not to go for fast growth, then basically you're on your own to a certain extent. So the scaling up of companies is a big focus in the current year. And I suppose one of the things we want to try and do this morning is make sure that people understand the options. Now, exactly what funding you're needing and where you should go depends very much on whether you're a startup, whether you're an established company, whether you're an exporter into one market and want to go to a second market, where you want to ramp up to, say, your main market, maybe the UK. And of course, the picture changes pretty dramatically if you're a services company or if you're a manufacturing company. Making things, as I found when I was in the manufacturing industry for many years, is extremely capital expensive. And you've probably seen in Davos the whole focus was on manufacturing 4.0, and that's this whole business of robotics and IT crossing over to create factories that produce without humans almost. But it's very much a driving towards smart technology-led startups, but it is expensive. So that does make it more difficult for startups who wish to move into the manufacturing area. Now, if you're looking across the board, let's start with the smaller startups. Your local enterprise office is the first protocol. Employing less than 10 people. They have feasibility grants for you to look at your proof of concept, get your business plan together. They have priming grants in there as well. They have a small business expansion grant. They will give you 50% of your cost of attending a trade show internationally. They have the web development and the training online voucher scheme is also there for somebody who wants to upgrade their website. Enterprise Ireland, then, you can go through different routes. The competitive start fund is there. You can get 50,000. They will take a 10% equity stake. The HBSU is going to say their prime driver one. That's where they put an awful lot. They're trying to focus high potential startups. They're hoping to move them very rapidly to a situation where they will have turnover of 1 million in 3 years and employ more than 10 people. And Enterprise Ireland will introduce the HBSU to co-funded seed and venture capital funding that they have available. So it's very much the holy grail is to get yourself taken in as an EI client company, and then once you're in there to move through to become a high-potential startup, and they work it through from there. Which is not the only way, by the way, and we've heard other speakers today talking about alternative routes and alternative funding mechanisms. Let's take that one as the one that is, shall we say, offering probably state banking its own taxpayers' money to assist companies who wish to move forward rapidly. So what they're expecting in 2016 is there will be 105 HBSUs, new ones created, besides the ones they currently have. They have a program where they're backing 28 graduates to come back and start up in Ireland, and they've targeted around 50 of those guys coming in. As you can see, the food sector, which is one of our biggest export sectors that have business from, not too many new startups in that sector that are taken into the HBSU front. And again, it partially reflects the fact that it's not a sector that equity and funds face too hard. There's a big push for female entrepreneurs, and there's a series of programs that are based on that one. And for the right company, I was up with the guys at the Economics Whiskey. They're down now recently. They just opened a new whiskey distillery. About a 14 million investment, classical kind of scenario, 4 million from their American investors, 4 million mix of equity and preference share and loan shares from Enterprise Ireland. And the third one, AIB, my colleagues at the back there from AIB. We've got Alan Macon and Gerald O'Sullivan, by the way, if anybody has any queries and more detailed aspects of funding that I mentioned associated with AIB. The scaling up is the one that, shall I say, is being pressed very hard by government at the moment. And basically, there is challenges when you're moving from, shall I say, your 1 or 2 employees to your 10, and then moving from your 10 to your 50, and then 50 to 250. After 250, you're no longer an SME, you're on your own. But the government is pulling on the government and through Enterprise Ireland for that. The banks are funding that whole sector extensively as well, and there's a lot of money available there. And there's a lot of equity funding. We'll have some speakers later who go into that particular area. But there are other ways of scaling up, and my favourite route is initially by going in on a partnership basis, and many multinationals do go international through partnerships. They then work it through and become acquire the partner in many instances. But in the early stages, they're not going to take a small percentage share. This particular chart here, I'm just trying to show you where AIB worked through. So you've got here at the beginning of a company, you've got the usual scenario where you're looking for, you're using your savings, your friends, and New Frontiers is a very good program. I've been working with some companies in that sector there in the last week. For proof of concept and to build a compelling business plan, the government will give you 15,000. And you don't have it's basically for anybody who's got a business idea and wishes to kick off. There's we're related to from HBAN, the whole business angel fund, and they also typically come in that particular area as well. Subsequently, then there's the move up as the business tries to expand and get customers, and you need some early venture seed capital. And AIB are involved with ACT Venture Funds there to support companies at that particular stage, and there are a number of others there of course as well. And then as you get more established, the Strategic Banking Corporation brought out their $200 million funding last year for issue making for banks. Again, this year they've done the same. So AIB have 200 million there. It's for the 2 to 10 year area, and so normally at a fixed 4.5%. So it's ideal for companies who know exactly where they're going and they're on this fast growth signal moving here. And then companies who are on take-off mode, you've got the bigger venture funds, and again the idea involved with that. And then of course there's the exit mechanism. All the venture capital guys want an exit mechanism, and most of the exit mechanisms in the last year have come through trade sales, and very few market launch. This particular chart, again, is similar to the last one, but what it's showing is on the manufacturing side. This particular scenario is quite narrow when it's a services company. When it's a manufacturing side, you have a major dip in the whole cash flowing of your project, and you spend longer in the red line. So you need a much wider tranche of funding during this time frame. Typically, for most of the bigger manufacturing setups in 5 years, most services companies will be up and running within a year to 2 years, and profitable certainly in year 3. PWA across the road was involved heavily in that in the early 90s. We saw a gap on the market. I was with Aer Lingus. We had our jet engine facility here, all decided. We saw an opportunity for a new facility, got going with it. Again, the same kind of scenario in terms of funding is IBA funding this business. About a third equity was pulled from Aer Lingus and our target. About a third from IBA, about a third from bank loans. I exited the same there 4 years afterwards. The new CEO invited me back in 1999 to review where they were at or having difficulties, and I went through the whole scenario with them. The big thing that was coming out at that stage, the market had moved, they'd done loads of college development, the market was fading on them, and they weren't able to, they were going to need a lot of funding to chase after the new, should I say, prospect that had saved them. Unfortunately, the shareholders, Aer Lingus being one, they were part of the other, weren't prepared to dip back in, and last year, the big manufacturing process is a slow rundown. They unfortunately closed last year, very big, just across the road there. One of the difficulties with PWA International was, you remember Brendan Carson and his favorite dreams, it was very much the old, if you build it, you will come, but in fact that isn't the case at all, really. In the real world, you have to build something that people want, and as the case with PWA, we were unfortunately building, so we had a capability to build things that people longer wanted, and we hadn't moved into an area of homes that they did want. So let's look at some of the alternative finances, and we'll get some more detail on that later. So we've got microfinance Ireland, we've got business angels, the EIIS scheme, the Employment Investment Scheme, equity funds, and crowdfunding. So if you're kicking off into a new business, whether it's manufacturing or otherwise, these are your options that are very much on the cards now. So Veronica Keller wanted to start up her own food business there. My favourite one from her lineup is the Crisp Crusader, the Good Crisp Crusader in fact. But anyway, she got 25,000, no questions asked about why it's always for high risk companies, no track record and so on. So 25,000, Veronica kicked off with that in 2012. Now exporting some into the UK, very strong. On the business angel front, there's a wide range of business angels, and we'll hear from some of them later. The government's had the BDS scheme, so we may have illusion of that. The government benefited this EIIS scheme, so it's effectively you're scheduled to pay 20,000 income tax off your salary. Instead of paying 20,000, if you invest a certain portion of your money into a startup company or a growth company, and then the EIS, then you get your tax back. So it can be very tax efficient It hasn't been used excessively until now. The worst improvement has been in the last budget. It makes it much more attractive. I think we'll see an awful lot more people using the AIS scheme over the next few years. I'm sure you've noticed in the papers from 12 months in terms of peer funding. Aztec, by Aztec money, we did a launch here with them when they started 2 years back. Grid Finance, Debt Exchange, Invoice Fair. They're all based on peer-to-peer. You're basically basing it on an invoice that you put on. At a certain interest rate. The last two big financiers in the Irish operation, and Swedish and Big Star, they're genuine crowdfunders. So you put your business on the take an investment interest in you. You probably recall Big Star's famous one. These lenses been enrolled it was a 3D lens company anyway. They went on Kickstarter and raised about 2 million and all within the 12 months Facebook decided they wanted to optimize it can be a route to fast growth. These are the options which are now available. It's not that much now available. And export supports from AIB. AIB have really taken on board this idea of working with the bank of slice rates of our industry. So the trade next 5 export champions. They put 200 million SME exports transformed in place. They put another 200 million in place on the strategic bank corporations. They were long-term on 2 to 10 years. They have a lot of lease financing options available to it, and they have partners with like Harris to get your export credit insurance in place, and DHL offer 10% discounts to getting into exporting. So a lot of supports there coming from AIB, and my 2 colleagues in the back out there if you want to get any more detail on that. So that was a quick overview, and we'll go through some more specific points. Anyone want to ask any questions, or we next speaker?